Hey guys, what's up? Welcome to this channel. In this video, I want to be walking you down to a strategy that I always use in the market. Now, for the sake of this video, I want to be using the MT5 to explain, not using the trading view per se. So I'm going to be walking you down to how to find your place in the market. Like what I say, the market is actually full of noise. Yeah, it's actually full of so many noise, but your ability to find your place is what gives you an edge. I know you hear traders say find your edge, find your place in the market. That is what makes you successful over time. Because why? If you're able to find your place, it's like saying you're in a queue and everybody's coming outside to display their own talent, while others are coming for dancing, some others are coming for singing. When it gets to you, you know what you're performing. You're not going to be doing someone else's role. That's what the market is. Okay. um that's what the market is. If you're able to get your place, it will give you an edge in the market. Because why? You are able to detect when the market comes to you. You're not supposed to run after the market. You're supposed to wait for the market to come to you. That is where some folks get greedy and start getting involved in the trade and just begin to run. Now, the first question you get when you get into the market, you should be asking yourself is, what are you looking for? Yeah, there should be something you're looking for. There is something you're actually expecting the market to do before getting involved. But if whereas you're just getting involved because you want to be there, you're going to end up losing money. You're going to end up losing money because why? You've not been able to find your place in the market. Now, there are certain criterions that we're going to be looking at in this video that dictate to us how to find our place in the market. Now, number one is how you think. Now, this is the number one because the way you think is what will reflect on your trade. Are you a kind of person that when the market comes to you, you are always seeing it as a risk, though it's a game of risk though, but you always see it as a risk entering the market because why? You're scared of losing money. That's the wrong perception. The goal here is actually to make the money, but you're thinking now you're scared of losing the money because why? You don't want to end up losing the money because of your past experiences. Maybe peradventure you have been losing money for a number of time and you think this one is going to be like that. Now this hard psychology is now playing out on your head, telling you that you're going to lose money. You have to correct it. If you're a negative kind of person, you have to change into becoming the positive kind of person. How do I mean? The only way to get out of that negative zone is when you are able to what? Tell yourself the truth. Take a review and sit down and think of putting down some documents on how you think. Now, trace what the problem is. What has been the reason why you are thinking that way? If you're able to identify this reason, those are the reasons that will be able to give you an edge and what make you conquer your fears over time. Now, the number two that I'm going to be talking about, which is the most important part in this video, is your personality traits. Now, your personality habits has to do with a vital role in the market. Now, what I mean by that is I'll use myself as a case study. Now, when I was able to get an edge in the market was because I was able to identify my personality traits. Now, like getting things done, one of them is how do I like getting things done? Do I like getting things done quickly, as in very fast, or do I like getting things done just because I just want to get them done? Or do I like getting things done because I want to get involved in a trade? Now, I'll give you an example. Let's say, for an example, I want to actually uh, um, get a job done. How do I get that job done? How does my personality resolve to that getting that job done? Do I get that job done quickly, or do I get that job done as in I can actually wait for a week, or I can actually wait for a day? Now, my ability to understand that it's what gives me an edge towards my personality. Now, how does this relate to trading? I'll explain. Now, if you're a kind of person like me, I like getting things done quickly. I always want to get things done quickly and move on to the next one because why? I don't want to waste much time doing one thing over and over again. That revolves to me becoming a scalper. Now, whenever I get into the chart, I can wait patiently for a market to come to me, but I understand that I always want to get things done quickly, which is my personality trait. So what I do is I look for a market opportunity and get a buy or a sell, and immediately I get involved in that chart, I'm out. My target are always 1 to 2 weeks reward ratio or 1 to 3. Yeah, I can allow the 1% to run, but I make sure I close 99 because why? My personality trait says I always like getting things done. That is me. I can't change it. Okay, that is about finding my place in the market. I understand that I'm a scalper. The fact that other traders get involved in the market and start doing day trading, where they allow their trade to run for months, allow their for a day, or allow a trade to run for a month, doesn't mean I have to look for that kind of trading opportunity. No, I have to be me. That's my place. Okay, that's my place in the market. Now the next one is another thing I observe about my personality trait is I like doing things on my own. Yeah, I got to discover that when I did a research about myself. I think I watched a video about Robert Greene. He said something. It said discipline is actually as a result of reward. If you tell yourself a reward, it will make you to get disciplined rather than just telling yourself to get disciplined without a reward. Now, if I get disciplined into trading the forex market over time, it will enable me become profitable over time. On the long run, I can be able to become successful and make a living from forex trading. So if I'm not able to get discipline, what's the reward? The reward is I will not be able to achieve my set goal. So why struggling in becoming disciplined? Why not focus on getting yourself to know the reward first before getting discipline? I understand that I'm a kind of person that I like getting things done on my own. So I can't follow the crowd. Right from while I was growing up, I did a research on myself. Like I said, this Forex is about you. In case I've not pointed it out, it's about you. The market relates with every trader according to your kind of person. The market is actually meant for everybody. Just that the reason why you're losing money is because you've not been able to find your place. Okay, I'll say this again. The reason why you're losing money in the market is not because it's because you have not been able to find your place. Your ability to find your place in the market gives you an edge. That edge you're talking about always that you keep hearing traders say an edge in the market. It's about you finding your personality, finding the kind of person you are. The market relates with day trader, swing traders, position trader that open their trades for over years, for a year or over years plus, or scalpers. Whatever trader that you are, the market is meant for you. Just that the reason why you're losing your money is because you don't know your place in the market. That's the problem. An ability to find your place, you know when to get involved in the trade. You know when to avoid the market. I'm going to be explaining something with a chart here, but let me say this. Let me say this. I understand that I'm a kind of person that I like doing things on my own. Now, what did I do? I get a research and a friend called me some time ago and he said, "Bro, I want you to feature in my video. I want to do something." I said, "Okay, guy, what do you want to do?" He said, "I want to do this. This is what I want to do. This is what I want to do," and it involved some other folks. Then I was now thinking, how do I make myself exceptionally different from these other folks that were involved in this video shooting? How do I make myself different? So I gave me research and I was like, okay, this is what I'm going to do. Immediately the video started, I did something different. And to my greatest amazement, the guy was pleased with what I did. It made me totally different from every other person that was acting that movie. And he was like, whoa, this thing is cool. I liked what you did. Now, I was proud of myself because why? I did something different from what he told me to do. Though in line with what he said, but I added some little spices to it. That is my uniqueness. Trading is like that. Now I'll give you an example in this chart. I'll give you an example in this chart. Let's say for an example, this is my trading strategy. I like trading the market in a trending condition. In case you've not watched the video where I talk about trading strategy, the video is on my description. I'm going to be leaving the link below. You can just click on it and gain access to it. Now, when I talk about the market coming to an area of value, I always talk about this. Yeah. Now, take note that sometimes the market comes to an area of value but does not give me my condition. Now, what do I mean by condition? A condition is what you're giving the market to show you before you get involved. And if you do not see that condition play out, you're telling the market that, hey, I'm not going to buy, I'm not going to sell until I see this. I'm not going to buy, I'm not going to sell until I see this. So if the market doesn't give you that condition, you're telling yourself that, whoa, this market is not meant for me, it doesn't want me to trade. As disciplined as you are, that's your uniqueness. So that place in the market that tells you that, hey, guy, until I see this, which is my place, I'm going to be giving an example. Mine is a market structure change indicator. Now, what is market structure change indicator? It talks about a double top, a double bottom for the case of this bullish, or a double head, or a head and a shoulder, kind of. So let's see what we have here. Now, as you can see clearly, we have a double top here. Yeah, double top. This is a head and a shoulder, but it's not kind of well displayed. Now, let me point out the head. This is the left side of the right side of the head. This is the left side of the head, and this actually is actually the head itself. This is the left shoulder, this is the right shoulder, and this is the head. Now, there are two strategies of entering the market. You can either enter at the neck here, this zone here, or you can actually wait for the pullback to occur before entering. Now, let's go and see if we have a pullback here. We got one. This was an engulfing candle that engulfed the bearish candle. You can actually enter here, or you can see a morning star here also, or a breakout here, or a breakout here for you to get involved in the chart. So as you can see, this was not this is just a structure hold. I know you're wondering what this is. This is just a structure hold, market structure hold. So it's just an indication for those that failed to enter the first time, they can actually enter here, and the market continues to the upside. Now, how do I exit this trade? I know you've been wondering, but this is how I exit my own trade. After getting involved here, I draw a trend line, and once that trend line is broken, I'm out of that chart. See, I'm out of it. I'll just leave the market here. So my condition for trading the market is still simple. I must see a market structure change before getting involved. And if I don't see that market structure change, I'm not going to be trading. Now, that is my own uniqueness. That is my own uniqueness in the market. Now, how do I make my own uniqueness? I know some folks go about saying, these Forex signals, you can actually enter the market and look for a sell opportunity. You can actually enter the market and look for buy opportunity. I'm giving you signal to enter the market. Guys, right from time, I never like signal. I'm going to be stating my fact here. Now, I'll tell you why. Because why? Signal can never actually help me for the long run in the market. I'll explain what that means. Now, peradventure, the person that is giving me the signal to trade the market actually stops giving me the signal. What happens to my trading career is I'm going to be done with it. Yeah. If the person that is giving me the market signal peradventure decides to say, I'm not going to be giving you signal anymore, what happens? I saw one in my DM. He was actually dropping a signal. He said, this is how to trade the market. He did that for over a month. Guys were paying him. Yeah, they were actually doing it, but my greatest shock, the signal room is actually closed. And that is how you keep running from one signal room to another. Because why? You are actually based off of trading people's analysis. Now, when you trade based on someone's signal, you're actually trading the person's belief. I'm giving you an expo in this video. If you're actually trading someone else's signal, you are trading the person's belief. You are trading the person's uniqueness. You're trading what the person believes that the market will do. I just told you what I believe the market will always do, and the condition I'm already giving the market to always do. The same thing I'm doing is what the person is doing. Just that you don't know. The person wouldn't tell you. The person only tell you when to enter a trade and when to exit the trade. The person doesn't tell you analysis. I bet you're not going to be making profit on the long run. You might be getting the money, and I bet you if that person's strategy start failing, you're going to be leaving that signal group. Why are you leaving? Because why? The person is no longer trusted. But the person is not the problem. The person is not the problem. The problem is you. You've not been able to find your place in the market. Finding your place in the market is what gives you an edge. Okay? If you are based off of signals, you're not going to be profitable in the long run. Because why? That signal room, you're going to be jumping from one signal room to the other. The next one is how you relate with certain issues based on your emotions. Now, if you're going to find your place in the market, you have to understand how you think. You have to understand how your personality traits work. You have to understand how your emotions come up. Now, greed actually comes up in the market whenever the market start favoring you. One, if the market start moving in your favor and you see yourself that you're a kind of person that is always greedy, there's something you should be doing. I'll tell you. Whenever you notice that greed is about coming in, close in 99% of your trade and allow the 1% to run. That way, whenever the market reverses and come and stop you out, eventually, which it will always do, you're not losing out in the market. And number two way greed comes in is when you make losses over time and peradventure you see your market come in your favor. Now, take for an example, I've been doing a lot of entrings and exits because of why I see the market going up, I will always buy without waiting for my condition to play out. Over time, I will get to find that I'm losing money. So whenever the market now come to my condition, I will always want to lose, risk high. That's greed now in place because why? I'm risking above my expectations. I'm risking above what I'm supposed to be risking. Why am I doing that? Because why? I want to recover from the losses I've lost from the market previously. So this is where the two ways that greed comes in. So now, if you know that you're kind of a greedy person and you're going to be getting greedy, why not wait for the market to come to your condition before you trade? Discipline yourself to wait. Now, the number two way is tell yourself the truth. How are you going to be risking to avoid risk? Now, what I do is to put my greed in check. I discovered I was greedy while I was starting up. So what I do was I was going to be risking 2% of my entire capital in a trade. That's controlling my greed level. So whatever the market moves, even if it's a very good market condition, I've already told myself that I'm going to be risking 2% in a trade. So if that thing goes above 2%, I know I'm violating my trading rule. Yeah. So I always try my best to put myself in check. The market is never the problem. The problem is you trying to make so much money from the market. There will always be opportunity. Yeah. Another thing I want to say is an additional, it's not supposed to be in this video, I'm going to be saying it. Please try your best to stay tuned in one market. Jumping from one market to another will not going to be getting you anywhere. Looking for liquidity, you're trading US Euro USD and someone just dropped a signal and said all USD is actually moving up, or let me say GBP JPY is actually moving up, and you just get involved and just start trading. Whoa. Before I was able to identify two markets, one odd USD and USD Swiss francs, is because those two markets, they actually move with my strategy. I did a back test and I got to find out that 99% of the time, or would I say 95% of the time, the market always respect my trading conditions. So I was like, okay, this is the market I'm going to be trading because I love it. Why do I love it? Because why? It actually comes in terms with my rules in trading. Okay, it actually comes in terms with my rules in trading. So the number two way is anger. Yeah, whenever you lose out in a trade, how do you relate? Do you get angry? Yeah, a lot of folks get angry whenever they lose out in a trade. Yeah, you move out in a trade and the market stop you out. You get angry. Yeah, it's normal. But how do you deal with that anger issues? That's the most important one. That's where risk management comes in. How do you relate to the market? What are you risking? Now, I got to find out that 95% of the time, anger comes out of a trade when you don't plan out before entering the trade. When you don't do an analysis before getting involved in the trade, you're going to be losing money. Yeah, you're going to be losing money over time. But whenever you plan out before entering a trade, you're not going to be losing money because why? You planned it out. And you've already told yourself that in case this thing goes against you, you're cool with the loss. You've already strategized what you're doing. Now, if I'm to enter this market here, here, let's say somewhere here, I'll be putting my risk here. Now, before entering here, hey, this is not something that happened coincidentally. I'm putting my risk below the trend line. Now, this is not something that happened coincidentally. This is a 30 minutes analysis. So before waiting for this candle here, this candle to be formed, yeah, before waiting for this candle to be formed, what I want to be doing is this. I'm going to be waiting since it's the 30 minutes candle and it's going to be taking 30 minutes for this candle to close. Once it's 24 minutes or 25 minutes, I go and measure the risk and check myself and ask myself a question: am I willing to enter the market? If I'm not willing to get involved in the chart, what I do, it's very simple. I just avoid it and look for the next opportunity. Now the next opportunity played out here. The next opportunity played out here. See, I'll either enter here and put my risk here, or I wait for the market to come to this zone and break above this. Sorry, let me take this out. Wait for this market to come to this zone. Once I see this market break above this, don't forget we have something that is called higher high and higher low. See, that is what happened here. The market broke above this and came back previously to this zone. So I can bet you that this race is going to be low for me. Yeah, I said so. See, I'll be entering here and I'll put my stop loss here. I have a reason for doing this, because why? I know this is the second left side of the shoulder and the market is not going to be breaking below it. So I've already seen it here. Either I get an aggressive entry here, or I wait for a pullback. And peradventure, if I don't see the pullback, what I'm going to be doing is I wait for another opportunity. Now that is above this zone here. This is it. Let me draw this. Let me move this out. So see, this is what I got. See what entry this is. The higher the market moves, the lower the risk. See what happened here. So I'm going to be risking this. Yeah, let me take this out. This is a breakout strategy. So now I know you'll be wondering that the market might reverse, but this is what I'm going to be doing. It's very simple. Since my risk is here, my stop loss is here also. I'm going to be risking this. So this is it. This was it. Let me do something like this. There are two trend lines here, you can see, but let me do something like this. Yeah, it's crazy, but it might not occur, might not happen. So there's something I want to say out, and that's what I learned from a video from Kojo Forex Trader. I said something. It said, you might not actually see the market come to you always, but whenever you see an opportunity, risk what you can be able to risk, because you don't know when next the market will come to you. Yeah, I sank into that and I was like, that really sank down into me, and I was like, that's cool. That's the best thing to do ever, because why? This pattern of getting involved, the market, you're not going to see an opportunity every day. So whenever you see that opportunity and you see that trading condition play out, you can risk and be comfortable with your risks. That's the most important thing. And risk what you can be able to lose.